Hi traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar for the upcoming 2 days. Before I take a look at the charts though, wanted to let you know that if you open an account with FXTM Broker via Elite Currency, you will get 1 month of ECS Live free of charge. So check out FXTM Broker if you're interested in that. And of course, you can check out ECS Live with live analysis and setups by going to elitecurrency.com/ECS Live Trading. So this is the euro dollar weekly chart, and we had a reversal pin bar, bullish pin bar candlestick pattern on the weekly chart last week. You can see wick at the bottom, close near the high, indicating that the bulls are in control, and price ultimately bouncing off a support level of 112.80. Now that was deeper and lower than I expected. As you might have heard in the last couple of videos, I expected to bounce around 113.50, maybe 113.25, but definitely 112.80 was a little bit deeper than I expected. That said, I also said that if it goes down there, it's definitely still a bouncing spot because 112.65 up to 113 is the bottom of the sideways zone and could easily cause a reversal and a move up as well. So that's what happened. We didn't get a daily candle breaking through 112.65, and the bullish candle, I think, is confirming that bullish view we had on the euro dollar, although it went deeper than we kind of expected. So looking at the bigger picture, I think we're looking still at the ABC correction, and it probably did complete an ABC correction here, but we're probably seeing expansion of the zone by this being a W, this being an X, and we might see an ABC within Y, for instance. If we put a fib from the very bottom to the very top here on this daily chart, you can see it bounce off the 78.6 fib of this entire move up, and I was specifically looking at this move up, and so I think that this could be considered an ABC, but we're probably seeing expansion through a WXY. So the bullish engulfing twins, in any case, at the 78.6 fib are very strong signal that price is bullish again after a deep retracement here, a lot of bearish candles, as you can see. That swing looks to be over with a daily candlestick pattern that bullish. I think that we can consider this swing over, and I think we're looking for a new bullish swing to the upside. Now that target could be anywhere, as I already indicated, basically up in here, I would say 117.50, maybe even up to 118, sorry, maybe even 118.50. That could be the target for this bounce. If we put a fib back on, actually, to look at the targets, you can see that the minus 272 target could be the first stopping spot at 116.70. The minus 61 per day target is at 117.93. And if we put whiz levels on the chart, you can see that the fourth whiz level is around 118.25. This is all on the daily chart. Let's take a look at the 4-hour chart. And once again, if we add the whiz levels, you can see that if it breaks above 114.30, we're getting an impulsive zone according to the whiz rules. That's where we expect the most momentum, typically between 3 and 4, 4 and 5, even between 5 and 6. So those are the big wide open spaces there. But between 5 and 6, there are a lot of resistance levels you got to be aware of. 117.50, 118, 118.40, 118.25 was the whiz level target on the daily chart. So there's a lot of mess there. I wouldn't count too much momentum in that space. But between 114, 116, 114.30 and 116.60, there seems to be a lot of good space with a positive 115.20, and I think that's where we can see the most acceleration on the euro dollar to the upside. So that's looking good. We had a break of this resistance trend line. We had a break of this resistance trend line. All of that looks good for upside. So now let's talk a little bit about how to enter potentially here. What kind of patterns can we see? So now on the 4-hour chart, this is just a burst to the upside because of these engulfing twins we had on the daily chart. On the hourly chart, that's also one straight rocket for the moment. I think we're looking for a pattern, some kind of bull flag, back into the 21 EMA, back into the second whiz zone, trend line, previous broken tops. Something of a flag would be great like this. I think we'll get that because the Asian session typically does not move much for the euro dollar, so we should see some consolidation just actually naturally occur on this currency pair. And it could be a triangle. It doesn't have to be a bull flag, of course. I think bull flag is probably the most likely in this case, but it could be a triangle. And then wait for that triangle to break on the hourly chart, 4-hour chart, and look for continuation. If it breaks to 114, I think this break is already looking good. I don't think we need to wait for the break of 114.30 necessarily because of this momentum already. So if we get the next break, I think there's a good chance it will break through 114.30. There could be potential ways to trade it later on if you get the break and you wait for a flag on a 15-minute chart after the third wiz level, and then you get a break of that. It could be a way to scale in or trade it as well. Another way could be to put a fib from here to here and look for a bounce at the 50, 38, 23.6 fib, and wait for engulfing twins, for instance, some candlestick patterns at these fibs to trade it. Another way could be for price to dip to the 38, wait for a turn, wait for a fractal, wait for a hook back here, and try to trade the hook back as you get, for instance, maybe a retest before you go break, retest, and continuation, for instance. So try to trade this second bounce in way rather than the first bounce. Those are some ideas how we can tackle the euro dollar, I think, on Monday. Tuesday, we'll have a new video so we can reanalyze it then. All right, pound dollar went well. The analysis on Thursday, we were saying let's put a fib from here to here and let's wait for a bounce. I think it was from this fib, all right, roughly speaking. And let's wait for a bounce at these fibs. I think that we're looking at a retracement within the uptrend 130. Oh, that was here on Thursday, I think. Let me check. Yes, I had the wrong fib. Thursday was actually somewhere in here. So we said this is probably a retracement. Let it retrace back to these fibs. Look for the bounce back to the upside. And that's what it did. So this was the fib actually, of course, on that Thursday, a little bit lower here. And that's what it did. Almost at the 38, just missed it by a bit. 130, played a factor 2, which is a psychological round level. Dipped below the 21 EMA, but then broke above it. And this is a case where the first breakout was pretty successful. In fact, sometimes I say the second break is more successful. Look at this, second break a lot better. This case, this was a first, an example where the first breakout was quite successful. As it broke above the 21 EMA, it did move up for about almost 80 or so pips. Pretty good breakout. Then we got a pullback and we still got the second breakout here, either on this candle or on this candle. And if you use the ECS candles, you could take this blue candle or the blue arrow as entries, for instance. Here, the blue arrow and the blue candle happened at the same time. Here, we had a blue candle, but it didn't really break above the 21 EMA, so that is a very risky one. Advisable to skip that. So these are just some of the ecs.SWAT methods of entering using our proprietary indicators, just for your info. Back to normal candles, and you can see that we had a good break. We did get the pullback eventually, and then still a continuation. This is looking like a very expanded push up. We already actually went above my main target of 131.70, which was my kind of main target area. It went up to 132.15. Very impressive, this pound dollar push, and it could go, I guess, even to 132.50, which is a quarter round level. So far, this is looking like a wave 1, 2, 3, 4, 5, and within wave 5, it even looks like a 1, 2, 3, 4, 5 that we can even push a little bit higher. Well, I guess if we put a fib from here to here, let's see, the minus 61.8 target is around that 132.50, so let's take off this fib. All right, we know where the target is. Let's put it on this wave 3. Wave 1, the top of wave 1 is here or here, right? So we wouldn't expect price to retrace deeper than 131.40, 131.28 if this wave analysis is correct. So we could expect a bounce off the 23, 38, or 50 fib and see a continuation up to 132.50. I mean, it could even extend up to 133, I guess. 132.75, 133, it's possible, but for the moment, I think 132.50 is the main target. So if we look at higher time frames, well, obviously a very clear bullish candle with the bulls definitely keeping control throughout the entire week. Look at that close right near the high. Very dominant candle for the bulls, very strong, volatile candle. I mean, this is huge. The chance that price is going to break for a higher high is very high with this candle, I think, and price is going to retest resistance areas up in here, I think, before turning, right? This is not a candle that we expect to reverse on. This is a continuation candle. Very difficult to imagine that we don't get a higher high in this candle. In fact, the dominance of this candle indicates that we should see a shallow pullback before continuing for a higher high, in my view. Looking at the daily candle, daily chart, we see, again, very dominant candles, good momentum. Very likely that we'll see a retracement, continuation up to retest that resistance zone. And then we'll have to see, of course, how price responds to that resistance zone. Otherwise, yeah, just looking for a flag and continuation for the moment. Of course, eventually, if we get a new higher high, divergence will kick in and this channel will be overextended. And I do think that price will make some kind of retracement or reversal at 132.50/133, just because of the sheer kind of expansion it has pushed. If it does break below the 21 EMA and this 131.28 is support zone, then something else might be going on too. Be careful if there's a lot of momentum falling and breaking below this. Be careful. That could indicate the head and shoulders pattern like this and a potential reversal back to the long-term moving average. All right, so be careful if there's a lot of momentum pushing through 131.28. Be careful of this pattern as well, and you could see an ABC. Just because it's bullish doesn't mean it necessarily has to continue. There's a good chance it will, in my view, but if it does do this pattern, be careful of that. Otherwise, I think it's pretty set. If there's a flag, look for continuation for at least one more higher high, if not two perhaps, and then there could be some retracement reversal as it hits bigger resistance. All right, that's it for now. Once again, check out the FXTM broker for our offer. If you start with FXTM through Elite Currency, you'll get 1 month of ECS Live for free. That's great with all our setups, webinars, analysis, etc. In any case, was happy to be here with you. Wish you all a great upcoming trading week and see you soon. Cheers.